All right, let's talk about a huge shift happening right now in big tech. It's a story about how the world's richest companies are about to spend money like we've never, ever seen before. And it's creating this massive split in who's making cash and who's burning it. Let's get right into it. So here's the big puzzle. You've got companies like Amazon and Google, some of the richest corporations in the history of the world. And all of a sudden, they're projected to start burning through cash at a rate that's just staggering. So what could possibly be so important that it's forcing them to spend faster than they can bring it in?
Well, to really get it, you have to look past the usual number everyone talks about, profit or net income. That's kind of the official story, and it can be shaped by all sorts of accounting rules. But if you want the real, unvarnished truth about how a company is doing, you have to follow the one thing that never lies, the actual cash. And that brings us to the key that unlocks this whole mystery, free cash flow. This one number, it cuts through all the noise and tells you exactly what's happening under the hood. So what is it? Think of it this way. Free cash flow is the pile of cash a company has left over after it's paid for all the big-ticket items it needs to keep running and to grow. You take all the cash it makes from its normal business, then you subtract all the money it spends on things like new data centers, servers, robots, what the accountants call CapEx. Whatever's left over, that's the purest sign of a company's financial power. And this isn't just some obscure number, As our source material calls it, free cash flow is the definitive arbitrator of corporate health. It's really the ultimate scoreboard for a company's ability to not just survive, but to invest and grow. It's the bottom line.
Okay, so what is causing this incredible earthquake in cash flow? The answer is simple. It's an arms race, a technological arms race on a scale we have just never witnessed before. We are talking about the global race to build the actual, physical nuts and bolts of artificial intelligence. $600 billion. I mean, just let that number sink in. By 2026, that's what the top 5 tech giants, Amazon, Google, Microsoft, Meta, and Oracle, are expected to spend on AI infrastructure. And we're not just talking about software. This is a colossal investment in hardware, in massive data centers, in the raw power needed to make AI work.
And to really put that in perspective, that $600 billion is 4 times what the entire publicly traded U.S. energy sector spends in a year. A single tech race is outspending a whole foundational industry 4-to-1. It's just incredible. And this spending is literally splitting the tech world in two.
So this spending frenzy has created 2 very different camps. On one side, you have the spenders. These are the companies pouring billions into building the AI future. And on the other side, you've got the earners, the companies selling them all the gear to do it.
Let's start with the spenders. These are those big tech hyperscalers we just mentioned. Their strategy is pretty clear. Sacrifice huge amounts of cash today in an all-or-nothing bet to completely dominate the AI-powered world of tomorrow. Amazon is the perfect example of this. Look at these numbers. In 2025, they're expected to generate a healthy $15 billion in free cash flow. But just 1 year later, in 2026, forecasts show that flipping to negative $17 billion. That's a $32 billion swing into the red, all driven by this massive spending on AI and robotics.
And nope, this is not just an Amazon thing. Alphabet, Google's parent company, is signaling the exact same play. They're talking about doubling their capital spending, which is going to put a major squeeze, as they say, on their own free cash flow. You can see the pattern here, right?
So at the end of the day, it's these 5 giants, Amazon, Alphabet, Microsoft, Meta, and Oracle, that are bankrolling this entire revolution. They're knowingly lighting cash on fire today, hoping for a massive payoff tomorrow. So where is all that money going? Well, that brings us to the earners. While the spenders are writing checks, these are the companies that are cashing them. They're supplying all the essential hardware, all the plumbing, for this historic AI build-out. And the numbers on this side of the equation are just mind-blowing. Let's take NVIDIA. By 2026, analysts are projecting the company will generate an unbelievable $168 billion in free cash flow. That's not revenue, remember. That's pure leftover cash. That is a financial performance on a scale that we've almost never seen before in business history. It's not just about the raw total either. Look at a company like Broadcom, which makes key networking components for AI. It's about efficiency. Their free cash flow margin, basically the percentage of every dollar of sales that turns into pure cash, is projected to jump from an already amazing 34% to a staggering 44%. They are becoming ridiculously efficient cash machines.
So these are the companies selling the picks and shovels in the great AI gold rush. You've got NVIDIA with its GPUs, Broadcom with its custom chips, ASML making the machines that nobody else can make, and TSMC, the factory building pretty much all the world's most advanced chips. Now, to really appreciate just how volatile and crazy this AI arms race is, it really helps to step outside of tech for a minute and look at a completely different kind of business, one that's built on pure stability. Take a consumer giant like Costco. Their whole business model isn't about these massive moonshot bets on the future. It's about having a defensive moat, a super powerful brand and a membership model that just churns out incredibly consistent, predictable cash. It's the total opposite of the AI spenders. And the contrast is just so clear when you look at the numbers. You don't see any of those wild swings into negative territory like with Amazon. Nope. This is what slow and steady looks like. Just predictable, reliable growth and free cash flow year in and year out. It's like they're living in a completely different financial universe from the high-stakes poker game of the AI race. So what does this all add up to? What's the big takeaway? We are literally watching the economic map get redrawn right before our eyes. For the first time, really, in the digital age, the big platform companies are no longer the most efficient cash generators. That title now belongs to the companies that build the infrastructure. If there is one thing you remember from all of this, it should be this. The AI revolution isn't just a story about code and algorithms anymore. It has become a massive story about hardware, about energy, about the physical, real-world foundations of intelligence itself. And that really leaves us with the one big question that defines this whole era. As we watch this historic amount of cash move from one group of companies to another, you really have to ask yourself, in this new AI gold rush, is it better to be the miner, spending everything you have for a chance to strike it rich, or is it better to be the ones selling the shovels,